Hey, good afternoon, everyone. It's your Christmas weekend grain update. I said I'd get this out yesterday or today, and the weather was so bad yesterday. I didn't want to step outside for more than 5 minutes, and I'd much prefer to do these outside because it helps my mind and I don't know. It's just makes more sense to me than being stuck in the office, but. I was hoping to have a full email report this week, but I had some family that arrived yesterday, and I thought, I'd like to do a good job on this next email. I'd like to cover, that full world grain demand and supply with wheat, corn, soybeans. I'll do whatever I can with canola. There's not a whole lot I can do there, but because I want to get some perspective going forward on that. Make sure that I'm not missing something. So we'll put that together, middle of next week. Markets are closed Monday, as you know. So anyway, first off, we've got a little tiny bit of good news. We've been dealing with all these canal and shipping closures. It's just ridiculous. So there's 5 of them. You've got the Mississippi too low. You've got we've had the rail. Our grain exports to Mexico have been in jeopardy with the rail situation there with those two entry points closed. We've got the Suez Canal closed. We've got the Panama Canal closed to grain ships, and it just seems ridiculous. And then and on top of that, we've got the Columbia River closed, starting January 1st through the end of March. So it's like, my goodness, that's a lot of anomalies that we're dealing with that we normally don't. The good news is they did open up the U.S.-Mexico border. That's back open, so we're at least we don't have to worry about our grain shipments to Mexico being in danger. So that was one of those. I thought, man, there's just no end to anything. But anyway, so that was one of the items I wanted to cover. The other one's the weather. As you can see, it's we got blue sky today. I haven't had very much of that. We've been in that fog low cloud belt for most of December, which is typical under a Nino pattern. We still looks like things are going to change in the 10 to 15 day forecast. So that kicks us out to January, about the 5th. 4th through the 8th, somewhere in there. It looks like a good chance of a pattern change, getting to somewhat of a normal winter. We've got as of today, we've got 10 to 20% of the normal snowpack in the Cascades, and gosh, that's going to be disastrous if we don't remedy that pretty quick. So I sure hope we do get a real pattern change, and I hope it's for the weather, and I hope the really brutal cold that China and Russia have been experiencing, I hope they keep it. We don't need it here. Granted, I know my friends in the Northern Plains are complaining about a brown Christmas. They don't get too many of those, but maybe they'll get a little snow out of the current system, but certainly been different. What else? The last thing. One of the things as we transition into 2024 is how do I say it? The commodity bond relationship has only been stretched like it is right now one other time, the commodity to bond ratio. And the only other time it was like this was in December of 2008. And that was after we had just, a brutal stock market sell-off, and all the money exited out of everything. And right now we're seeing that same ratio. And if you recall what happened right after that, you saw a massive amount of inflows come into commodities, and it ended up screwing up our basis. But what happened was the vehicle they used was your commodity index funds. Those funds became extremely popular after 2008. And if you remember 2010, we had, you know, the shortage of futures contracts and some of the smaller grain contracts. And we had the basis, the cash basis was horrendous because of that. But it elevated the price of everything greatly. So I'm not convinced we see that starting in the new year, but it's sure a candidate. You know, the last couple of years we've seen the index funds position just disappear. About the last 3-4 years we've seen that index position disappear, and so they're no longer a big long position. So, and understand that the index funds are not the hedge funds. There's a totally different. The index fund is trades like a stock. It has particular rules they have to follow. For example, if you buy a certain amount of, or, you know, let's say you spend money on an index fund, it's going to give you a percent of energy, a percent of agriculture, a percent of livestock, you know, a percent of metals to make up that basket, and then that'll rebalance every year. The hedge fund, when you give money into a hedge fund, I should say invest, not give, but when you invest money into a hedge fund, they pretty much have the control. They buy and sell whatever they want. They can be long, they can be short, doesn't matter. Where index funds have those rules, and they're going to be one or the other. So, or they have to follow those rules. So understand it's a completely different vehicle. And if we do see index funds starting to move in, it's going to be, which would make sense because just the extreme low of most of the prices. I would think we could have a pretty good year here coming up if we see them coming in. So we'll be tracking that as normal. Last but not least is just the overall wheat market. You know, on the technical standpoint, we've made, you know, we made the turn. We got about 80-90 cents out of that on the upside, and then we've backed off about the 30-40 that I expected we would. And you know, we may have to spend another week or two down here, but I would not be surprised if those hedge funds want to get out of their position as they continue to scale out of that. And if they do, then you know, we should see a pretty good move higher. And you've got China in the background as a threat to the wheat supply as far as how much they want to buy. I mean, if there's any truth to the harvest rumors they had, where they had 20-30 million metric tons get damaged or ruined, you know, the buying that we've seen so far may be just scratching the surface. They may continue a lot. So soft white wheat still kind of a dog. We've got a couple reasons. One, China was a big buyer last fall. They bought, you know, fall of 22. They bought lots of white wheat. They bought 15 million bushels this last year. So far on this crop year, they bought 2.5. So not much performance there. That's one of the hang-ups. The other hang-up is a lot of elevators put in their deferred pricing pools or market pools and whatnot, and a lot of people signed up for those, and so the elevators got title to those bushels and have kicked the wheat down the river to keep the pipeline full, and Portland's not having to reach it all to get any bushels. So that's another part of the problem. As the river closure starts January 1st, you know, we may see some shifts there. So anyway, that's about all I got for now. It's Christmas weekend. I hope you guys have a fantastic Christmas, and remember to take care of those folks that you know, have either lost someone or by themselves. Make sure you go, you know, invite them to your gathering and take care of them. And it's been such a weird year, and markets have been weird, and you know, such underperformance in the commodity sector across the board, and at the same time you've got reasons that should propel markets to be much healthier. But you know, I guess we all feel it. We all know we're in kind of a strange time, and the good news is these times typically don't last forever. So if they do, we'll have to answer that question later. But anyway, again, look for your email coming out you know, midweek, Wednesday, Thursday, probably next week. Hopefully it's another quiet week in markets. This week was relatively quiet, and that helps. So anyway, y'all have a great time. Thank you. Bye.